Welcome to Investment Talk Only with Johnny Ruiz. It's time to get to the money. It's investment talk only. If you say you got the money, gotta show me. A lot of people talk, but that be phony. I just remember what Jerry Mack told me.
Yo, what's up? Welcome to Investment Talk Only. I'm Johnny Ruiz, my co-host Monique Benitez. We have a special guest today. First, let's go through, what we're gonna even run through today.
All right, so today, the episode is about real estate. So what we're going to do here is obviously talk about real estate. That's one of the things of investing. So we have our guest, Damar Drummond, who is an entrepreneur in the real estate business. And we're going to talk a little bit about that. He'll talk about his journey. We'll discuss some questions that came in about real estate, and then we will go to the stock of the week. And I think that'll probably cover it.
Yeah, so definitely want to touch on every avenue when it comes to investing. This is investment talk only. So obviously the stock market isn't the only place to invest. So Damar has his own business. He has his own renting properties that he's been doing for a few years now. So definitely want to have on and show him his experience or tell about his experience. So Damar, just introduce yourself, please, if you can, and just tell him, your kind of your background and how you came up, to this point and your, experience in real estate.
Yeah, Johnny, Monique, thanks for having me. Appreciate you guys having me on. I'm originally from Irvington, New Jersey. That's where I grew up. It's right across the street from Newark, if y'all know anything about Brick City. So it's been a minute since I've been home. So let me see. Real estate. I started getting into real estate after college, really. So I went to Winston-Salem State in North Carolina. And then after I graduated, I had a few corporate jobs, and I still have a 9-to-5 right now today. But to be honest, what got me into real estate was watching how Johnny started looking into starting businesses. So one of the first businesses that I saw him try to create was the STEM Youth Center. He pitched me the idea, and I was like, man, that's big time, trying to get our community into, science, technology, engineering, and math. So I loved it when he broke that down. So that was the first business that I saw him get off the ground. So I was like, man, you could really do this. He set up the LLC, set up the business accounts, and got rolling. So after I saw that, it really, put a little battery in my back. Like, yo, we could actually do something here. So with that, it came a lot of time. You have to have a lot of time to go into that field. So from my perspective, we have to earn that time. So becoming free so you can do what you want. Because even though the idea is great, just don't have the time to do it. So one of the things that I came across that you didn't need as much time to manage it was really real estate. So a lot of people might look at real estate and not think that, you can have that as passive income and not be so involved. And you might hear nightmare stories about tenants and this, that, and the third. But after doing my research, I found that there are many ways that you can invest in real estate and not be so involved where you have to spend time and a bunch of your time and, really get to a point where you can be free. So one of the first properties that I purchased was last year, actually. Is a condo in Winston-Salem. So some of the steps that I took to find that property was really doing research on my neighborhood. So in Winston-Salem, which is where I went to school at, was understanding where do people want to be? Where are the jobs at, And in that market, a lot of people want to be around shopping. They want to be around the malls. They want to be close to the highway, I-40. So with that, I spent about a year with the real estate agent, just looking into different properties and things of that nature to find that right property. And one of the things that made it the right property was the location. It's around the corner from, the malls and shopping centers. And the big deal there, then the biggest thing that I look at when I'm looking to invest in a real estate property is cash on cash return. That is the biggest.
Go into that, because that probably will go over some people's head. And So we're using this as a like an avenue for people who want to just get started, who are interested in real estate but don't know the ins and outs. So cash on cash, you said that's important. So what does that mean?
Yeah, to me, it's the most important thing that you can look at when you're trying to, invest for buy and hold real estate. So buy and hold real estate, and I'll go back to the cash on cash return, but buy and hold real estate is you purchasing an investment property and you're essentially, doing your renovations or light renovations, whatever it is you need to do to get it rent ready. So you want to have a tenant, get them in there, they pay you rent, rent minus expenses, that's going to be your cash flow. So your cash on cash return is simple. I'll put it like this: is the amount of money that you put into acquiring the property. So any dollar that you spent in purchasing that property, whether it's the down payment on acquiring the property, the closing costs, any renovations that you had to do. So you total all that up, and that's your initial investment into that property. So just full disclosure, my first property all in, I put about $20,000 into it. So, after a year's time, my cash on cash return on that property was, I believe, 19.5%. And that's just the income and expenses associated with that property. So what you do is you take the cash flow that you have. So let's say you make $1,000 a month is the rent, and you got $500 in expenses there. So your cash flow on that property is $500 a month. So your cash flow on $500 a month, and you multiply that by 12 months. And once you get that, you just divide that by the amount of money that you put into the property.
Hold on. Give me 1 second, Jamar. Okay. So you guys are both
going too fast.
Because I'm like, you guys are both financial advisors. So you guys are like, y'all all into like the numbers. And you guys are about to geek out. And I'm like, I need to stop this real quick because I know how y'all get. And you guys start talking like $1,000 and $500 cash flow. It's like, calm down. All right. So for people who are not financial advisors and are not sitting there wanting to hear numbers on an Excel spreadsheet and all that stuff, right? So for like the common person, the first thing that you're basically saying, the first thing that you looked at to get started is do research. Do your research on the area, on the properties, etc. Right?
Absolutely.
Cool. Then you started. So then you started saying like you put in $20,000. So do you feel that you have to have money, because most people don't just have $20,000 sitting around, right?
Yeah.
So,
good point.
Yeah. So for a person who doesn't have $20,000 sitting around, what are some different avenues they can go to purchase their first investment home? No,
that's a really good and fair point. And lucky for me that I have both scenarios. So that was one scenario where I found that property and I had the money to get into that property because I invested in the property to live in. So when you purchase a home, you don't have to put down 20%.
Okay.
The minimum down payment for a residential property is just 3.5%. And that might have changed. It's just, that's what it was when I bought my first property that I lived in. So
okay, so what you're saying is you bought a property and you lived in it first. You invested into your property.
But that was not my first rental property. That was just my first home. So
I get it. So
yeah.
So your first home, so you bought a home to live in. Yep. You invested into it and then eventually used it as a rental property. You moved out and rented it out.
Right. So that's another scenario. So that actually came after the first property. So that was the first residential property that I purchased, which I only had to put 3.5%. Only had to put 3.5% down. So the property is $100,000. It's a nice townhome, and 3.5%. That's $3,500. That's not $20,000.
Yeah.
$3,500 got me into my first home, and on top of that, I'm paying less than I was for rent. So down the street, I was paying, $950 for rent, and they started building these townhomes down the road. So we said, look, let's get into a property. We only gotta, invest $3,500 of our money, and they're brand new. So the upkeep was nothing. I mean, we didn't have to put anything into the property. So yeah, there's still ways of getting into a property without having a significant amount of cash to invest in it.
Okay,
And then
so
can't you also get like if you don't have any money saved up, like the 20,000 or whatever, if you have good enough credit, can't you get like a line of credit, like a personal line of credit, and then you can leverage the bank's money to put a down payment, either the 3% or whatever, to get into the home, and now you have income coming in, which is paying off the line of credit, but also you get some profit out of it too. Would you say that's a good strategy? If like, I don't know, what do you think about that?
Yeah, so with that strategy, it's a more advanced strategy, and you have to be pretty disciplined to do that strategy. But that's definitely another way that you can get into the property. So if you have good credit and you open a line of credit with the bank, and for those who don't know what a line of credit is, it's like your credit card, but liquid. Instead of using it to swipe at the store, you can pull cash out and use that money for what you need it for.
do you need to own a property already to have a line of credit?
Not necessarily. There's different lines of credits. I did open up a HELOC, so home equity line of credit, and that was actually the money that I used to purchase that first property. So it took me $3,500 to get into the property that I lived in, and then 4 or 5 years later, I used the equity that I had in that property to purchase my first investment property. Then after I moved from that residential property, it became my second, investment property.
So I want to touch on that. The HELOC it's a pretty nifty financial instrument. So the HELOC is basically you own a property, and say you do the traditional 30-year mortgage, and you've paid it off 10 years in, and so now cell phones really, and now you have 10 years worth of equity that you have paid down on your house. So say it was worth it cost 300,000, you paid 50,000 off, it's still worth 300,000. Now you have 50,000 worth of equity that's yours. So the home equity line of credit is basically, you can go to the bank and say, hey, for this equity I have in the house, which is the 50,000, will you give me a line of credit, basically like a credit card, like you said, and then you could kind of do whatever you want with that 50,000. That's like a really simple explanation of that.
Yep.
And you pay interest on it.
So, and that's one of the tools that I use. And they did offer me a cash out refinance. So there's a difference between taking money out of your house and getting the cash up front, and then you owe it back immediately, and then using the HELOC. So with the HELOC, you only owe what you use. If you take the cash out and do a cash out refinance, which is of the $50,000 that Johnny was talking about, if you just take the 50,000 up front, you owe that immediately. You have to start paying on that the next month.
Yep.
So with the HELOC, it's better because it's a line of credit. You can use it as you need it.
Yeah.
But definitely have to be disciplined on that.
What would you say the average person, right? They're starting to, like, they've been renting for a while, and they're just like, I want to start. They made the decision, I want to be a homeowner, right? What would be the top 5 things? Like, what would be the, what they should start looking at? Their credit, right?
The first thing that's the very first thing that I was going to say is your credit in order? Because banks don't want to lend money to individuals that are risky. And the lower your credit score is, the riskier they'll view you as, someone to lend money to. So you definitely want to get your credit in order first and foremost. There are programs where if you don't have the best credit, you can still get into homes, but you're not going to get the best product out of that. Product being, the rate that you would, acquire for that property that you want to purchase. So I would say
Okay.
your credit is the most, important thing, because that gives you access to money. Even if you don't have money in the bank, it's important to just have access to money. Because
Okay.
can you imagine if you needed, $30,000 and it was life or death and you just couldn't get it? So having that credit and having line of credit gives you access to money. So you don't have to really worry about what's in the bank account. You can have your cash in investments and allow it to grow, knowing that you still have access to money if you need it. So that's what I love about, different lines of credit. So
All right, so I
Nice.
want to ask 2 questions in a row. All right, the first one's gonna be really simple, and the next one's gonna be more advanced. So, first one is just the steps going through the process. What are the steps on you make a decision you want to go to get into the real estate game? What are the steps to actually doing that?
So, I mean, everybody probably has a different method of what they think is the right thing. So I can only speak to what I did, personally. The first thing I did was I found a realtor, not just any realtor. Don't just go look in the, yellow pages if you still do that kind of thing in 2020, but go find a real estate a professional that deals with investors, so they understand that, oh, you're looking for a 10% return on your money, or 15 or 20 or 30. Work with those realtors that understand investing. It's even better if you can find a realtor that has investment properties, because they understand what goes into it, how to manage them, what you need to be looking for. That to me is step number one, because I mean, I
So
personally,
interview
I'm
your
not.
realtor.
I'm sorry.
You saying interview your realtor, basically.
Yeah, definitely.
Okay.
I mean, I did. Shout out to my man Anthony Thomas. He found me that first property.
I
But
ran into
yeah,
your
we
realtor
went
like
to.
3 times in a grocery store. Like it was like 2 times in Chipotle and stuff. I was like, hey, he was about It's funny.
Yes. So we
Oh
we I,
God.
we went to a little coffee shop, and chopped it up, and he let me know. I asked him the hard questions, like, all right, how many deals are you closing a month? How many investors are you working with on a regular basis? Like, I mean, you really need to. I mean, they work for you basically, so you need to know what they're capable of doing and what their level of knowledge is before you just
Okay. So realtor
sign
found a
up.
realtor.
Yeah, that's number one.
Mm-hmm. Go
And you
ahead.
said you.
The next
I'm
steps.
sorry.
The next steps to
Oh,
actually
so after
get
you
in there.
after you find a realtor, at that point you let them know what areas you're looking for. So I let them know the different zip codes that I'm looking in. So told them, 27103. This is the zip that I know a lot of people want to, live in. It's close to the mall, close to 40. So they'll set you up on a schedule to just start blasting you emails. They'll set up the requirements. Are you looking at 2-bed, 1-bath, 2-bed, 2-bath, looking at how much square footage you want, what your price criteria is. So you talk to your realtor about what it is that you're looking for and what that return is that you're looking for. So that's step one. You find your realtor, set up a very specific criteria of what you're looking for. Because if you don't know what you're looking for, you'll never find it. You understand? So make sure that you understand what you're looking for. How many times have you, if you just go out there and you don't know what you're looking for, you're not going to find anything. But if you get that criteria down to a specific set,
Yeah.
you're going to find it. It's going to pop up. It's going to happen.
Okay.
It took me about a year to find it, but I didn't change my criteria, and the perfect opportunity came up from me being specific in my criteria of what I was looking for.
Okay. And so does
After you,
the banking thing, does that come beforehand or like after?
so that's a funny question, because I knew what my credit standing was, so I wasn't really worried about whether I could get approved or not. But if you know that your credit is not on the up and up, it may be worth understanding first where you are credit wise, like what your buying power is, talking to some mortgage companies and finding out what is the amount that you can actually get approved for. Because then again, that's part of your criteria is the price, how much you can afford. And even if it's
To
how
get
much you can
pre-approved.
afford, it might be how much the bank is willing to give you.
Got it.
Gotcha.
Yeah.
All
And
right.
then
So
Mhm.
I was gonna say, you find the
Go
house you
up.
want, then what happens?
So once you find the house that you want, your realtor is gonna draw up an offer. So they'll submit the offer on your behalf. You'll let them know, hey, the house is X amount of dollars, but I'm only willing to bid this amount. So a lot of times what happens is you submit that initial bid, and very rarely do the sellers accept that first bid, because they want to get top dollar. You want to get a good deal, they want to get top dollar. So you got to have someone that's on your side that can kind of give you the perspective of what's a good starting point. So you don't overbid and you don't underbid. So a term that you'll hear in real estate is, what are the comps? You know, what that means is, what are homes selling for in that neighborhood? So if homes are selling for $80,000 the last 3 sales, you don't want to go in there and pay $90,000 and, you know, put a new high in, and then you paying $10,000 more than you need to. So you're gonna start at,
Comparisons, right? Comparable houses.
yep, comparables, yep.
I have a
And
question.
that's for housing, the prices as well as rent. So, yep.
Okay, so once you purchase the home, right? As an investment property, it being an investment property, do you put it in your name, or did you decide to open your own business, real estate business?
So 2-part answer. The first property that I owned was my residential property, so that was in my name. A lot of times the bank will not allow you to purchase a property in the name of your business.
Okay.
So Monique Benitez LLC, you go to the bank and say, hey, I need $20,000 to purchase this property, they're gonna shoot you down. They're not gonna give it to you. So a lot of times what happens is investors will purchase the property in their name if they're not buying it in cash. You know, there's some investors that already have plenty of cash, they can buy it outright, and then they'll refinance in the name of the LLC. So there are some small firms that will refinance the property into your business name, but starting out, it's easiest to just get it in your name and transfer the property into the name of your LLC.
Okay.
Which is what I had to do.
Okay.
All right.
Yeah,
So
I'm not a lawyer, so you have to talk to your lawyer to do that. So I'm not providing any recommendations.
Well, DeMar Drummond said.
Yeah. Go to this YouTube and find him.
Yo, so everyone take a moment, hit that subscribe button right there, yeah, down below. Subscribe, like, and share. Follow us on Instagram and Twitter at investment_talk_only_MDI. Yes, that's the name. And definitely hit us up in the DMs, or you can email us at admin@mdinvestmentsllc.com. We definitely want to hear from you. We want your questions. We want your feedback. So hit us up. Anyways, let's get back to this money investment talk only.
Don't do that.
What about like tidbits that you wish you knew? And also I want you, or I'll say tidbits that a lot of people don't know that are advantageous, especially the tax component. Like, what are some of the tax benefits? Because I know real estate is really big on that. So can you give us any insight on some tidbits that a lot of people don't know and why there are benefits on tax?
Yeah, so there's tons of benefits of tax in real estate. And I'm not a tax advisor and not a CPA, so you need to talk to those individuals to get the specifics on, you know, how they can help you. But from my own personal experience, you know, I didn't have to pay taxes last year, you know, because of real estate and a golden nugget called depreciation. So with depreciation, is basically a non-cash expense. So the idea is basically over time, you're going to have wear and tear, things are going to fall apart, things of that nature. They know that that's going to happen with real estate. So right now, I think it's 27 and a half years you can depreciate your property over. But you have to have a CPA and make sure you have the right cost basis for that 27
What
and a
is
half
the
years.
CPA?
Certified public accountant.
Oh, okay. See, you guys are doing your finance talk, and I don't even know what that means.
Well,
Kind of had an
Bo,
idea, but I didn't know what it meant.
that's what it's about,
tax
though. You
professionals.
ask those questions so we can, put it in terms where everybody can understand. And
Yeah, because I know everybody was lost like me. Everybody's like, what? All right.
CPA, that's what the goons use to hide their money. The account.
Oh,
Hey,
like
handle that.
see, that's what I'm saying. Like this is
What was
going
that
back.
Jay-Z line? My accountant deserves a medal or something like that. I don't know, but I don't know nothing about that.
I know what you're talking about right now,
Yeah.
but
Drug Dealers
I
Anonymous.
can't think of the line.
Drug
Dealers
Dealers
Anonymous.
Anonymous. Look.
Wait, so this is like how is so CPA is those people that they money laundering?
Yeah, that's why I was getting at.
Okay, well I was
I'm sure there have been many CPAs that got caught up into money laundering. Yeah, for sure.
Yeah, the money order.
But
let me write this down real quick. Let me
the clean ones will make sure that your books are in order and make sure the IRS is not on your back.
That's what I was gonna say. They clean your money, right?
Yeah, in every way.
I'm just trying to. I'm not.
Who is they? Your CPA is the accountant that's going to make sure your books are in order.
Exactly.
We don't want to give bad ideas.
Even that, anyways.
Anyways, moving on. We're telling all of our
So
secrets.
the depreciation is a tax shield just because government laws allow it. And the ending result is that it reduces your taxes. Your
Yep.
taxable income, right?
Yep, reduces your taxable income, and you want that. I mean, there's a lot of codes in the tax code that allow us to use that to our benefit, but I mean, you just have to know that those things are available. So a lot of it's education and knowing that, hey, if you do own a business, these are the benefits of owning business. There's probably a ton of people out there that do something on the side, and it could very easily be a business, and all they need to do is take the few steps that they need to, incorporate, get your, operating agreement in place, get your EIN number, get the bank account, and now you have a legitimate business, and with the legitimate business, you have business expenses. So yeah, we just need to change the mindset of, entrepreneurship and moving towards it, because a lot of our people have so many skills and things that they can, monetize, and we just don't know the right way of getting that stuff done. So
Exactly.
That's my next goal. My next goal is to buy an investment property. First, I'm investing in my own house, then buy an investment property. That's the goal. So that's why I was really excited about this episode, because I'm honestly just like, okay, so where do I even start? That was like my biggest thing. Like, where do I even start?
Yeah.
Yep.
So
Any other things like most people don't know that you would like our people to know? Our people, viewers.
So to me, the most important thing is to take action. Is to not sit on your hands, because you could watch videos and be on YouTube all day long, and somebody can be giving you game all day, but if you don't take action and you don't make a move on it, you're just missing out. And a lot of it has to do with fear, like the whole fear of failing, and it's a bunch of bullshit, because, excuse my language, I don't know if we
No, you could cuss on here.
Yeah, it just a lot of people don't make moves because of fear. And once you get rid of that fear and you're ready to move forward, man, things start opening up. you start to want to learn more about what you can do and how you can move forward. So to me, that's the number one thing, because it's get rid of that fear, get rid of that I'm afraid of what people are going to think, and they telling me what I can and can't do. And we just gotta, it's a mind shift, 100% mind shift.
I think that's spot on, because a lot of these people I talk to, I talk to people all the time about, where do I start? And I don't know much. I want to get to a point where I'm good. And like their number one fear is like losing it all or losing the majority. But I'm like, a lot of people come from where we come from. We don't have much anyways. So how much are you really losing? How much do you have to risk to get the high potential? It's not a big comparison.
100%.
Yeah. So yeah, just step out and do it.
Yeah. So I'm hoping that you guys and this podcast kind of like helps remove that fear that we see in a lot of our people and wanting to, take action. Because that was the number one thing. I was like, all right, this is the game. I did research for about a year. I was like, all right, I'm ready to pull the trigger. This is it.
A year though? That's a
Huh?
long time.
Yeah, but
No, but one year of like research. Like I was actively looking to find the property.
I know,
Not 1 year.
and that's a long time.
Yeah, but he was out there.
How fast a year goes by.
Yeah, and the year he was out there, like actually physically going into properties and looking. It was a year to
Johnny has come with me to see some.
So then that's a whole nother thing you guys need to be talking about is patience, because somebody like me, I'll be like, second week, like, all right, this is the one. This is the one. Yeah. Sign me up. Where do I sign?
Does it meet that? That's why you need a specific criteria, though.
Yeah, and
because if you find it in 2 weeks and it meets your criteria, that's great.
Yeah.
But you need to have that specific criteria: 2 bed, 2 bath, 1,500 square feet, 20% return, whatever it is.
Yeah.
You find that. That's where the fear kicks in. You start looking for things that.
Or you become impatient and then you lower your standards, like relationship.
Yeah, that's true.
Like
you do need to stick. You do need to be disciplined.
Yeah. Yeah. People like, okay, well, I know he ain't all that I want, but I'll settle for this.
Yep, and both scenarios don't turn out good.
I know, right? Oh my God. All right, so let's get into the questions. We had some questions that came in. So I'm gonna read them to you. So somebody said, do you recommend services like Diversity Fund? Do you know what that is?
I don't know what Diversity Fund is.
Okay.
I don't.
All right,
Johnny, do you know what that is?
No, we're gonna have to do our homework on that. Sorry.
Yeah, we're definitely gonna do. How do I invest low money amounts in real estate? So I guess like with the little bit of money, being able to invest in real estate.
I mean,
basically like broke.
Say that again, Mo.
Basically, like if we're broke, like how do we get into it, even if you have a little bit of money?
So one option is, the scenario that I gave, which was if you're saying a little bit of money, that's relative to the person. We don't know what's in everybody's pockets and purses for the ladies. Mm-hmm. But $3,500 was like, at the time, like, dang, I got to shell out $35, but it's not that much because it's not 20%. I don't have to put $20,000 down. But then there's other strategies in real estate that I'm not as familiar with, like wholesaling. Some people wholesale, which is they basically own the contract to someone's home and they sell it at, a markup, and they keep the money in between.
They sell the contract, not the home.
Yes. Yeah, not the home, excuse me. They sell the contract. So I'm not as familiar with that process, but if you're willing to learn that strategy, I mean, my understanding is that doesn't take any money. It just takes legwork and, maybe a little bit of marketing funds of getting your name out there and flyers and things of that nature and mailers, so you can get phone calls from people that are motivated, to sell their home. So that's one strategy, but it's a strategy that I personally am not familiar with. I've just seen, other individuals that are investors, talk about that strategy. So there are ways of getting into real estate. Another one that we didn't talk about was when you purchase a home, and there are homes and some of them are duplexes, and the duplex is just a home that has two sides to it. So you live in one side and rent out the other, and then you only have to pay the residential rate. You still don't have to put down the 20%. You can still get in that property for 3.5% and then rent out the other side and essentially live for free with a little bit of rent coming in on the other side. So there's different ways, and I mean, you just have to want to do that research and look into it.
I'll piggyback off that. So the wholesaling, which you sell the contracts, so you basically buy the contract that's worth something, and they just market it up and sell the contract to somebody else who actually wants to buy the house. And so you're not actually buying the house; you're buying the contract of the house, and it's more of a numbers game where you just, you're buying the contracts and selling the markup, and then you just keep on doing it. So you're making money off the percentage of the markup. The other way is to get into real estate is find a group of friends that are like-minded, pull your money together. And real estate doesn't even have to be residential homes. It could be convenience stores and gas station convenience stores that people don't want to take care of anymore. They just want to get out of it. You buy it, or it's just run down. You buy it, you renovate it, and then you can either sell it or just run the store. But that's real estate as well. But a lot of people I know, they pull their money together specifically for convenience stores, and something that you have to need $20,000 for. Now you got 10 people. Now you only need $2,000 for it, and y'all split the profits. And the profits get smaller, but if you do that a few times, then you got a lot of real estate and you got a lot of profits coming in, and you only need a little bit amount of money to do it.
That sounds like a good family business idea.
And and actually, this is really doesn't have to do anything with anything. But McDonald's, what business are they in? McDonald's.
Food industry.
Real estate business.
They're in the real estate business.
How?
They franchise all their stuff. They really just there to provide the real estate.
That's a good, goes to the next question where it says, how do I get an investor for my house? So basically, isn't that basically what you guys are talking about? Investors?
What do you mean? You said, so when they say investor for their house, or we want everyone to become an investor, whether it's, real estate or the stock market. So you don't, I mean, if they're talking about someone to partner with, maybe, is that what they're trying to get
Possibly.
at? Is they don't have the money, but they need an investor to put up the money?
Yeah.
Okay, so in that scenario, you need to really know your homework, because who's going to give you money if they don't believe that you know what you're talking about and know what you're doing? So in order to get an investor, I mean, if you stand in front of somebody and you need to give them a pitch, and they need to believe in you and believe that you know what you're talking about and that you're going to return their money. So if that's the case that they're talking about, you really need to become, a learner. You need to learn a lot and show that you've learned a lot. And I meant to say student. You need to become a student.
Also, I would say, rubbing the right elbows. How do you even get in front of their eyes is networking.
Yep.
So go to real estate workshops. You can find them like anywhere. I think you could just Google anything, workshops, conferences, and also meetups. I think it's an app, the Meetup app. You have you have a topic about anything, and people meet up. I don't know if they're doing it, now in the COVID universe, but you could go to meetups and they'll meet at, I don't know, a bar, a library, whatever, and they'll just talk about investing. If that's the topic, real estate, if that's the topic, go there. You could learn from people. You can say, hey, do you want to do a business venture? Whatever it is. But the point is you network with people that have that common interest.
Okay. So one last question, just basically could wrap that part up. If you kind of answered it already, but your five top tips for first home buyers. Like, what would you say the five top things are?
So credit, credit number
Credit.
one.
Okay.
Credit number one. I'm going on the fly. I didn't know you were gonna ask me that.
Okay.
So
That's the
finding
beauty.
a realtor. Would you say?
The beauty of it.
Yeah.
It's real
Put you
life.
on the
Find a
spot.
realtor.
Okay.
Find a realtor. Number two. Number three. Know your market.
Know your market.
Know your market. Know where you want to be. That's part of. I mean, that's part of the criteria. So three, you can say is criteria, and I'm gonna just lump that in with knowing your market, because if you don't know the market, you're gonna have the wrong criteria and you won't
Okay.
find what you're looking for. Four, I'll say. What would number four be? So once you get,
I was gonna give some, and it might not be important.
I already know what the last one is. I'm trying to figure out four.
Oh, okay. Debt to income.
So that would, to me, would go along with your credit.
Okay.
Mm-hmm.
Yeah, that would go along with your credit. I would say four is. I'm gonna give you top four, man. So I don't.
All right, go ahead, because I got some. So yeah.
Okay, go ahead, top four.
Top four is gonna be take action. Do not sit on your hands and expect
That's a good one.
things to
You'll
just
never
happen.
get it.
It'll never happen. Like if you don't get out there.
I feel like you're talking
to
me right now.
I am talking to you, Mo. I talk to you every time that I see you.
I know. It's like take action, and I'm like, oh, I've been saying this for a long time. One day I'm just gonna come up and I'm gonna be like, yo, I just bought this condo on the beach. You guys know what? Yeah,
I'll say a part one, and it's a two-part. It's 2 in 1. It's knowing all your expenses that you're gonna up front before you even purchase it. All your expenses to the.
That's a good one.
And realize this. I'm surprised you didn't say it. Realize that you make money when you buy the house, right?
That's
not
true.
when you sell the house.
You make money at the front of the deal.
Yeah, at the front of the deal. So you have to get.
If you don't buy right, you're not gonna win. But I also would lump that into the criteria, like knowing what your return is, what the square footage is, kind of like that criteria is really a big bucket. It's like square footage, size. Are you looking for a duplex? What is the return that you're looking for? So all those things in that criteria bucket are critical for you to find the right opportunity for you. So, but take that action, Mo. Take that action.
Give me some time. I'm gonna do it. I'm just gonna show up one day at dinner. One day I'm like, hey guys, so guess what I did? I'm like, what? That's usually how I work.
You're gonna throw the deed on a dinner
on the table. Boom. I'm like, oh, let's go on vacation this weekend, and you're gonna be like, where are we going? I'll be like, oh, an Airbnb, my house, mi casa.
Hey, that's another method. That's another method you can make money off of real estate. So.
For sure. So, I mean, it was great having you, DeMar. Like you gave a lot of knowledge. You put out a lot of content out there. You guys kind of
that was good stuff.
Get out on me for a minute, and I'm like, I can't. You're like $1,000 and $500 in cash flow. I'm like, oh my god, I gotta stop him. I was trying to figure out how I was gonna stop this before it got too deep. But I appreciate it. I know Johnny appreciates it, and I'm excited to see where your business is gonna go. Can
we get to the stock of the week?
And I mean, can we give DeMar his love? We gotta give DeMar his love and tell him thank you for coming and all that stuff. Johnny's like, we don't care. We just want to know about stock week. But all right, so let's get to stock of the week, Johnny. Because right now
you're having me. And no.
Right now you're 2 for 2. So I mean, it's interesting about these stocks of the week because you never give too much, and then when people hit me up and they give me the feedback, they start giving me information, and I learn about what it is, and I'm like, oh, that's what it was. Yeah. So
I try to give them just enough to entice them, but so mostly the stocks of the weeks I give off is because of the fundamentals. So when analyzing a stock, you kind of do two things. You do a fundamental analysis, and that's kind of like the background in the company, the management, what the business model is, the value they actually bring to the to the public, including their like their financials, like their income statement and stuff like that. We'll get into that other episodes, but and then there's another side called technical analysis. And technical analysis, you're looking at the trends of the price movement. So has it been shooting up lately this week? Has it been shooting down? Has it seen some what we call resistance at some price point where it hits it and it keeps on coming back down and knocked down? So there's kind of two ways to like analyze a stock. So usually I give it off the fundamentals because that's like maybe 60 or 80% of how you should get into a stock. But this one is just going to be pure technical analysis. All right. So this is the stock of the week. It's a Costco. So the symbol is COST, cost.
Is this Costco like the wholesale
Yeah.
place?
Mm-hmm.
Oh,
That's
okay.
the Costco that we all know and love. So this,
I actually shop at Sam's, but all right.
yeah, I do too. I meet more people that shop at Costco.
I don't have a Costco next to me, that's why. But
Oh, okay. It's you where I'm like, I thought everybody was Sam's, but I don't know.
I
So
need to get a Costco card.
yeah, me too. And I heard there's some differences too. But anyways, so it's the stock of the week based off of trends only, not fundamental analysis. All right. So the trend is that in the last month, I'm looking at the chart right now, 3 times in the last month, the last few weeks actually, is hit the price target of 348.75 3 times and have come down.
Mm.
And so usually when you hit a resistance and it keeps on coming down, but it keeps on trying to work its way back up, a lot of the times, if it happens to break through that resistance, it's going to shoot up a lot. So my point is that the price point I just gave you, 348.75, if it happens to go above that, it's probably going to shoot up a lot because it keeps on retesting that price mark and it keeps on getting shot down. So if it does go up, it's going to go up a lot. The point is that there's a lot of sellers there at that price point. So every time that price goes up, they start selling it. And if they run out of sellers, then it only keep on going up. So look at Costco the next few weeks. It might just
You said it's at
give you a good profit.
348 what?
348.75.
All
You
right.
lost, Mo? Are you lost?
No, because you guys know me. My mind's always like left field in the gutter. So my mind was going somewhere else.
Oh
He
my
was like,
God.
once it breaks through, okay, yeah.
Yeah.
Never mind. Go ahead.
348.75. Just remember that price point. If you get in and it goes above that, you might make a good profit. That's just off the technicals though.
Okay. So Costco, everyone check that out. Let's see when do we know, like, does it ever, okay, so is there a time period of when this is like, once you know, okay, after 2 weeks and it didn't do nothing, then it's not going to do nothing?
So it's more of a swing trade strategy. So with swing trades, those are probably good for like a few weeks to a month.
Okay.
Maybe even a little bit longer than that. But yeah, if it's hitting like a month, I even heard like maybe even 3 months, then
Okay.
it's probably not going to happen. But usually a few weeks to a month, you're good for a good swing trade, and that will be it. So it's like a swing trade. You get in, it boosts up a lot, then you get out the position, and then you take your profit to go home.
Okay. All right. Well, thank you for that stock of the week. Thank you, Damar, for being our guest, and hopefully next time.
Ooh.
Oh, you got a shirt too?
Yeah, you know I had this on.
I did not. That's messed
waiting.
up. Like, I don't even have a shirt.
Nah, I represent for my brother over there, man.
I see you. I just stole his whole banner, so that's fine.
I know you repping too, but I appreciate you guys, man, having me on. I
Yeah,
love
this
what
was
y'all
great.
doing. I appreciate y'all, and to MDI and Investment Talk Only, man.
All right.
Doing big
Yes,
things.
investment talk only. Peace.
See y'all in the chat.
Show me the money! money. Investments are only. We keeping it coming.